Welcome to The Explainer. Today, we are going to pull back the curtain on something that can seem really complicated, but is an incredibly powerful tool for building wealth, the stock market. So, if you're a complete beginner, don't worry, you're in exactly the right place.
Yeah. Does the whole idea of stocks, shares, and exchanges make your head spin? Trust me, you are not alone. It really can feel like this exclusive club with its own secret language. But what if I told you the whole thing is built on a super simple idea? We're going to break it all down.
I want you to picture a gigantic farmer's market, seriously. But instead of folks buying apples or fresh bread, they're buying and selling tiny little pieces of companies. That's it. At its heart, the stock market is just a huge marketplace where you can buy a slice of a real business. So here's our game plan for today. We've got 6 steps to take you from 0 to 60. We'll start with the absolute basics, like what even is a stock? Then we'll build all the way up to the kinds of habits that really successful investors use. Let's jump in. Okay, first things first. Let's get right to the core of it. When you buy a stock, what in the world are you actually buying? So this is the main idea you gotta wrap your head around. A stock, or a share, it's not just some blip on a computer screen. It's a real piece of ownership. When you buy just one share of a company, you legally own a tiny fraction of that entire business. Its brand, its factories, its future ideas, all of it. So why even bother owning a tiny piece of a company? Well, there are basically 3 big perks. 1, like we said, you're an owner. 2, some companies will actually share their profits with you. They send you cash payments called dividends, which is pretty cool. And 3, this is the big one, capital appreciation. It's a fancy term that just means if the company does well, your little piece of it can become more valuable. You can sell it for more than you paid for it. All right, we know what a stock is. So now let's look at the marketplace itself. How does all this buying and selling actually go down? It really helps to think of 3 main players in this game. First, you've got investors. That's people like you. Now, you and I can't just stroll into the New York Stock Exchange and start trading. We need a go-between, and that's player number 2, the stockbroker. They're the licensed firm that plugs us into player number 3, the stock exchange itself. That's the big, organized platform where all the action happens. Okay, let's get practical. What do you actually need to get started? The good news is, it's a lot simpler than you probably think. The checklist is super short. You need a bank account to move money around, you need a tax ID member for the legal stuff, and you need to open an account with one of those stockbrokers we just mentioned. That's it. That's your ticket into the market. Now, when you're picking a broker, you've got 2 main flavors to choose from. On one side, you have full-service brokers. They cost more, but they give you advice and research, which can be awesome for beginners. On the other side, you have discount brokers. They're way cheaper, but you're in the driver's seat. They just give you the tools. Which one is right for you just depends on how much handholding you want. All right, your account is set up. Here comes the fun part, placing your very first trade. When you go to buy a stock, you have to place what's called an order. Let's look at the 2 most common types. Really, this boils down to one simple choice. Do you want speed or do you want control over the price? A market order is all about speed. You're basically shouting, get me this stock right now, whatever the current price is. A limit order, on the other hand, is all about control. You're saying, hey, I want to buy this stock, but I will not pay more than $50 a share. Your order just waits patiently, and it only goes through if the price hits your target. So, we've covered the mechanics of how to buy. Now we need to talk about what to buy. See, clicking the buy button is easy, but buying the right stock, well, that requires a whole different mindset. Here's a crucial truth. Just because you can buy a stock doesn't mean you should. Smart investors don't just throw darts at a board. They do their homework. And that process of really looking under the hood of a company, checking out its financial health, is called fundamental analysis. One of the most common tools for a quick checkup is something called the P/E ratio. It stands for price to earnings. All it does is compare the company's stock price to how much profit it's making. It helps you answer a really important question. Is this stock a good deal right now, or is it overpriced? Now, as a super general rule of thumb, a P/E ratio under 15 is often seen as pretty reasonable. But, and listen up, this is really important, it is not a magic number. A fast-growing tech company will have a way different PE than a slow and steady utility company. So it's most useful when you're comparing apples to apples, companies in the same line of business.
Okay, last section, let's talk about what really makes a successful investor. It isn't about getting lucky or having some secret formula. It's about building the right habits for the long haul.
I love this quote because it just nails it. The stock market is not a casino. It's not a get-rich-quick scheme. It's a machine that rewards people who are patient, who do their homework, and who stick to their principles over years, not days. And you know what? A huge part of being disciplined is just avoiding the really common slip-ups. Things like letting fear and greed call the shots, buying a stock just because your buddy told you to, or putting all your money into one single company. A lot of times, winning at investing is less about hitting home runs and more about just not making the big, dumb mistakes.
So, if you only take one single thing away from all of this, let it be this. Never, ever stop learning. The world changes, companies change, and the best investors are the ones who stay curious and are always willing to learn something new.
And there you have it. You've got the building blocks now, from what a stock is to how to think like an investor. Your journey has officially begun. So the only real question left is, what are you going to learn next?